Deputy Owen Murphy, Deputy 10 minutes.
Thank you, Chairman, and thank you, Mr. Fingleton. You're very welcome. I just want to go back to something that the Chair raised with you earlier on in relation to the NTMA and why they didn't place deposits with your society. And your answer was? That
our ratings received from the rating agencies wasn't high enough. They would be looking for AAA to place deposits with the counterparty institutions. We hadn't AAA.
Well, when Mr. McDonough was asked that when he was before the committee, he never mentioned the ratings agencies.
Well, I mentioned them because that was the reason.
Well, I'll tell you what his reason was as the NTMA.
Sorry.
Yeah. And from page 93 of the transcript, he said, we won't place any deposit with INBS. They'll look for credit lines from us and we wouldn't give it to them. We just couldn't understand the business model.
Sorry?
We just couldn't understand the business model. This is Mr. McDonough. We took the view that really it's more trouble than it's worth to place $6 million on deposit with this institution when it really was a very opaque structure. So what do you say to that from the NTMA as to why they wouldn't place deposits?
That's an opinion. I don't agree with it.
It's an opinion. And you say that they wouldn't do it because the rating agencies didn't give you AAA.
That was my interpretation of why they wouldn't do it.
Where does that interpretation come from?
It came from, I remember asking one individual from the NTMA, or that institution.
NTMA.
Yeah, NTMA, about deposits. And he says your ratings are not high enough.
What was the context of that conversation? You were pursuing a credit line?
Just a casual conversation that I just bumped into this individual and I just mentioned it. That's all.
And were they senior in the organisation? Were they speaking with authority, or were they just?
Yeah, they were senior in the organisation. Yeah.
Okay. Can you tell us who you were speaking to?
I'm not. I don't know whether I can. Is that, Chairman? I can. Yeah, it was Dr. Summers. Yeah.
Dr. Summers. That was the reason that he gave you when you met him, but
that's my recollection.
Wasn't an arranged meeting.
And there was only once. There was only the only time that I mentioned it. I don't believe. I'm not too sure now about Treasury whether they sought to put money or obtain deposits. I don't know. But that was only one occasion, and that was the answer.
But this wasn't when you were pursuing a credit line from the NTMA. This was an informal meeting.
It was several years before. I think it was maybe the early 2000s or something like that. It wasn't relatively recently.
Okay.
Nothing connected with the opinion given by Mr. McDonough.
Is it possible that the view of the NTMA might have changed subsequent to that?
Oh, I can't comment what NTMA says or does or what their policy was. I can only give you my opinion. But that's all what's within my knowledge.
Okay. Even after you were told that by Mr. Summers, you continued to seek credit lines from the NTMA, is that correct?
I don't know. I didn't.
You didn't?
No, I didn't.
Okay. And
I wasn't aware that
placing the $6 million in the credit line.
I wasn't aware anybody else did either.
Okay. And did you ever raise this issue with anyone in government?
No.
And
I understood the organisation. I would have accepted that as grand.
Okay.
No problem. I would have accepted. I would have understood that they were in the most conservative element of the market, and they had to be whiter than Caesar's wife.
And why didn't you have the preferred rating from the ratings agencies?
We had adequate ratings for our business. We had good ratings, but apparently not good enough for them.
For the rating agencies or for the NTMA?
For the ATM.
Okay. How did that compare to other banks or the societies?
I don't know. I have no knowledge of any other banks.
But you never pursued it any further with the NTMA seeking of
absolutely
credit line?
Not. That was just a comment I made, a question I asked, an answer I got, and that was it.
Okay.
And I never raised that issue with anybody ever after connected with NTMA.
Okay, and you refute that statement from Mr. McDonough about the very opaque structure of the society?
I don't know what evidence he had. What evidence was he basing it on? I don't know. I would dispute that. That's it. It's his opinion.
Okay.
And he's free to make his opinion, but he must have evidence, and I don't know what evidence he was relying on. We had published at that time 2007 accounts, I think, in that context, and the auditor had certified them, and the controls were in place, the accounts were first class and all the rest of it, no qualifications, and they were excellent.
Okay.
to any outside observer. So I don't know why or why he made those comments. Only he can explain that to you, and you had him in here, and I'm sure he did. I can't remember. I wasn't watching his interview.
I'll move on to some of KPMG's work
Sure.
for the Society. And in Volume 1 of the evidence books, page 112, we're looking at the statutory duty confirmation letters that the KPMG would have to send to the financial regulator every year.
Sure.
And there's a series of them in the evidence booklets for 2004, 2005, 06 and 07. And what KPMG is noting in this statutory duty confirmation letter is instances of breaches and errors in each of the sectoral returns, prudential returns and large exposure returns. And they also note in their letter to the financial regulator that you had already informed the regulator verbally and in writing of these breaches and these errors.
Sure.
So just tell me first about your relationship with the financial regulator. And what does informing the financial regulator verbally of something involve?
It will be part of our policy, always to inform the regulator. If we came across any defect in any return we made. Returns are made, there's large volumes of funds, they're in different pockets, different codes from time to time, and errors can be made. And when we come across them, it has been our policy all the time to inform the regulator of them, even the most minute. And most of those referred to, that you're referring to, were not material. Maybe one or two of them may be in
your relationship with the regulator?
My relationship, or sorry, the Society's relationship with the regulator was grand, and my own personal relationship was very good. I respected the regulator, and I thought he was very good.
And if there was ever a problem
in the manner in which he did his job, under the policy he adopted on a principle-based basis.
I mean, could you or would you ever contact him directly in relation to an issue with the Society?
The Society, I heard that evidence being given that people went over the supervisory management to the regulator. We never did. And as far as I am aware, I'd be very surprised.
Okay. Never a direct contact from you?
I have no recollection of it, unless somebody else has, but I didn't.
Okay. Just in relation then to these errors that you said were not material, in the documentation we see that they're errors that are picked up during an internal review within the Society.
But no, they wouldn't be an internal review. They'd be. You're still referring to the returns, are you?
Well, I'm talking about the large exposure returns, say in March 2004.
Yeah, they would be returns made on aggregates of lending individuals, and things change over a transitory period. At the 31st of things, something might be coming in and delayed. For example, a payment might come in and it wouldn't be cleared by the bank, and we discovered that we have misstated the loan balance of somebody, and we advise the regulator or whoever in his office would be dealing with it.
It continues to happen in 04, 05, 06, 07. In 06 you had to resubmit the September returns twice, the June returns twice, the December return.
I don't think it would be any different, Deputy, in relation to any other organisation.
Okay.
To be mathematically perfect in assembling information, there would be some errors.
Well,
and if you evaluate them, the vast majority of them were non-material, and they were advised to the regulator as part of our policy by the Society, not
and they keep on happening. And the financial regulator says to the Society that it's concerned with the number of errors reported, and it requests the Society to outline what controls the Society was going to put in place.
Well,
so what controls were put in place?
They were put in place, and I think you'll have the opportunity this afternoon of speaking to the financial director.
Okay, well, I know that the errors continued after this from the financial regulator.
Errors will always continue in the context of the manner in which comprehensive, detailed information is provided and applied. That's all I'd say. I'm sure it's not different in any other organisation. But again, we would have preferred if there wasn't any errors. We're dealing with people who are human and who make mistakes. That's it.
You didn't see them as systemic weaknesses in the society?
Sorry?
You didn't see them as systemic weaknesses in the
No,
society?
because we're not here yet.
Okay.
Deputy.
Thank you. And then can I just ask then about the final returns, or the sectoral returns, which in each of the years from 04 to 07, you're exceeding the sectoral limits, the 200% of own funds and the 250% of own funds. So what was the regulator's response to this when that was raised with you?
Well, I recall, and I think I mentioned in my witness statement, that we discussed or made some proposal, I think, to the regulator in relation to that, as far as I recall, the criteria was very lumpy.
Lumpy? Lumpy
in the sense that we looked for more stratification, like to put in home loans. Under construction, you put home loans separately, you put buy-to-let separately, you put investment properties separately, retail separately, and you apply a factor to them or a limit to them. Whereas historically, they were all lumped into one. Retail would be lumped in, and then construction would be lumped in, or property and construction lumped into one. So we wanted them to stratify and to apply, and we were looking for that. And we did ask, and the regulator was to come back to us on it, but he never did. And even though we sent a reminder,
between 04 and 07, he never came back to you.
No. What we did, I think, was the last reminder we sent him was about 2004 or 5, as far as I remember. But that's our position.
And the board was satisfied.
So since that, there was never any communication. And I believe, like that he was considering implementing some policy on it. And I note in Hohen's report, which I didn't agree with, where he said it was nearly impossible to ring-fence sector limits between institutions, as there was too many ways around them. I don't agree with that.
But, and just sorry, Chair, to clarify, the board was satisfied that you were in breach of the limits in those years?
Well, they probably would be aware of them as we were, from time to time. But we were looking for clarification for them to be dealt with in a manner that was appropriate and necessary and clearly understood.
And just to clarify, finally, you don't agree with the Honan report either, is that correct?
No, I didn't say that.
Sorry.
I disagreed.
That's what I heard.
With one comment. I disagreed with one comment Honan made in relation to sectoral limits. Okay. That he said the reason that he considered it wasn't feasible to introduce sectoral limits or to implement them or to supervise them was that they could be easily evaded by institutions. And I said I didn't agree with that. That I couldn't see why not, if the regulator chose to do so.